would say that gold is some sort of a mirror of our monetary world. It's a mirror of our society. And, what this mirror is telling us is actually we're seeing a very broad devaluation of fiat money versus hard. Then I would say it's also the fact that inflation could stage a comeback. I don't think that inflation is dead. I actually think that we will continue to see high inflation volatility, and therefore another wave of inflation could become a trigger for gold going forward. And then obviously, it's pretty clear that what we call performance.
As global economies grapple with persistent inflationary pressures and monetary policy challenges, gold has emerged as a focal point for investors seeking stability in an increasingly volatile financial landscape. Ronald Stoeferle, a prominent gold analyst and fund manager, renowned for his comprehensive In Gold We Trust report, offers compelling insights into why the precious metal may be poised for significant gains in the coming period. Stoeferle anticipates continued high inflation volatility across major economies, positioning another potential wave of inflation as a critical catalyst for gold's future performance. His analysis introduces the concept of performance gold, which has become increasingly relevant in today's complex macroeconomic environment. The relationship between inflation and gold prices forms the cornerstone of Stoeferle's bullish outlook. Historical data supports this perspective, showing that gold and inflation typically maintain a positive correlation. When inflationary pressures mount, gold prices often respond with corresponding increases. This fundamental relationship has been particularly evident in recent years, contributing significantly to gold's remarkable 90% gain over the past 5 years. The timing of gold's recent surge tells a compelling story about market dynamics. A substantial portion of these gains occurred during periods of elevated inflation, especially following the June 2022 inflation peak, when consumer prices reached levels not seen in decades. This pattern reinforces the traditional view of gold as an inflation hedge, demonstrating its continued relevance in modern portfolio management. Beyond its role as an inflation hedge, Stoeferle presents gold as something far more profound, a mirror reflecting the health of the global monetary system and broader society. This perspective suggests that gold's performance serves as a barometer for underlying economic conditions, revealing the gradual but persistent devaluation of fiat currencies relative to hard assets. The historical precedent for gold's value preservation capabilities spans centuries of economic upheaval and monetary experimentation. Throughout history, gold has maintained its purchasing power with remarkable consistency, even as numerous paper currencies have suffered collapse or severe devaluation. This track record of stability has made gold an enduring store of value, particularly during periods of economic uncertainty or monetary instability. Before we dive into this video, make sure to like, share, and subscribe. 97.4% of viewers aren't subscribed, and only 2.6% are. So please hit that subscribe button and turn on the bell icon.
Daniela, I'm putting out the In Gold We Trust report now for 19 years. And since then, I think the first report was launched when gold was trading at 550, something like that. Since then, people keep telling me gold is too expensive. Now it's too late to buy gold. And for me, it's always important to regard gold as a monetary asset. And therefore, we have to compare it to monetary aggregates. And what we did in this report is we had a look at the so-called shadow gold price. We had a look at, the development of various monetary aggregates compared to the price of gold. And from a monetary point of view, gold is actually still extremely undervalued. I wouldn't say it's super dirt cheap anymore. Like, for example, in 2020, when we published the first In Gold We Trust report, where we said, okay, $4,800, that's our price target for the end of this decade. But we're now, I would say, at still reasonable price level. So, for example, you mentioned compared to the 1980s or another secular all-time high in 2011. Since then, obviously, the price of gold is up. 1980, gold was trading at $850. 2011, gold was trading at 1900 at the secular peak. But since then, actually, the monetary base, for example, 1980 compared to the current level, is up more than 3,500%.
Yeah.
If you compare, for example, the M2 money supply to 2011, it's up 128%. If you compare the federal debt in 1980, it was 860 billion. Now we're at like 36 trillion. And that's only, the official debt. We're not talking about the unfunded liability. If you compare it to median house prices, for example, in 1980, you could buy a house for 63,000 bucks. Now the median house price is 416,000. So what I want to do with this table that we presented in the report, say, well, if we compare it to those secular highs, the final point of long-term bull market, we're definitely far away from these price levels. So gold is in an established bull market, it's in an uptrend, but we're not close to the top. Well, I would say that the new gold playbook is still, it's still valid, and it's a point that I'm really emphasizing, because I'm traveling quite a lot, not only business wise but also privately, and wherever I go to, especially in emerging markets. I've been to the FMF conference in January in Saudi Arabia, and you can really tell that gold for people in emerging markets, in the Arabic world, in China and in India, has a clearly different appeal compared to the Western. And if we have a look at the numbers, obviously it's not only central banks from emerging markets, but also private individuals being responsible for the majority of the gold demand. Let's say roughly 2/3 of the gold demand is nowadays coming from emerging markets. So I think that's basically this kind of love trade that I think Frank Holmes, he coined this term. And I think it's important in our world to make a positive case for gold, and not only this gloom and doom, everything will go to hell case.
Right.
So we're seeing very, very steady growth in physical demand from emerging market. Now, what has changed over the last 12 months is actually the fact that now, very late, but finally, Western financial investors are starting to realize, well, actually, perhaps we should have some gold in our portfolio. So only starting in the second half of 2024, we've seen some modest inflows into the gold ETFs. And we continue to see inflows into the ETFs in the Western world, but it's still, I would say, fairly muted. There was a survey from UBS where they said the average family office, so those ultra high net worth individuals, they have currently allocated 2% in precious metals. So from my point of view, there will be, or there is, a bull market in sound money assets. And let's face it, it's not only gold that is trading very close to all-time highs, but also Bitcoin. So I would say that gold is some sort of a mirror of our monetary world. It's a mirror of our society. And what this mirror is telling us is actually we're seeing a very broad devaluation of fiat money versus hard.
According to Ronald Stoeferle, the current gold bull market stands on several robust foundations, with central bank demand serving as perhaps the most significant pillar supporting the precious metals' sustained strength. This institutional buying represents a fundamental shift in how sovereign monetary authorities view gold's role in their reserve portfolios, moving beyond traditional diversification to strategic positioning for an uncertain global economic future. The scale of central bank gold purchases has been nothing short of remarkable, with these institutions acquiring over 1,000 tons of gold annually for 3 consecutive years. This sustained appetite demonstrates a clear and unwavering commitment to gold as a critical reserve asset, reflecting broader concerns about currency stability, geopolitical risks, and the need for monetary sovereignty in an increasingly fragmented global economy. The historical significance of recent central bank activity becomes even more apparent when viewed in context. Last year marked the third largest expansion of central bank gold reserves on record, with purchases reaching impressive levels that came within just 6.2 tons of 2023's total and fell only 91 tons short of the all-time record set in 2022. The 2022 record deserves particular attention, as central banks purchased an unprecedented 1,136 tons of gold that year, the highest level of net purchases since comprehensive records began in 1950. Let's get back to the video.
Daniela, I think this bull market is basically it's based on a couple of different pillars. First of all, we're seeing very robust central bank demand. We had like 3 years we in football or in soccer language, we talk about hat tricks. So we had a hat trick 3 years in a row, more than 1,000 tons of gold being purchased by central banks. And it's not only this, what I would say, kind of, behind the curtains remonetization of gold. It's also the fact that the repatriation of gold is picking up momentum again. So this is a sign for the loss of trust that we're seeing in the international system. And obviously, Donald Trump was to large parts, to large degrees, responsible for this, this loss of trust in international, let's say, institutions and established things that we all got used to over the last decade. So there's kind of a bear market in trust, let's put it that way, on the international. But then what's really excites me, Daniela, is the fact that things like a revaluation of gold, for example, or auditing Fort Knox. This was something
Yeah.
that we talked about, in our gold bug world, but now this is really becoming mainstream. Yeah, I
Yes,
think,
it's
gold is
true.
really becoming center stage now. However, if I talk to institutional clients, most of them say, well, we couldn't care less about it. It's already too expensive. We didn't participate in that bull market. It's too late. So that gives me a tremendous amount of confidence that, we will be climbing this wall of worry, that every major dip is being bought. And that's what we're seeing, actually. We're seeing very, very shallow corrections. And that tells me that there's so much capital waiting on the sidelines, waiting to
Right.
enter this trade, that we're still, as I've said, far away from the top. There's the CEO of StoneX said that there were more than 2,000 tons of gold, physical gold, being imported into the United States over the last couple of months. Now, who's actually buying that? Is it institutional players? Is it high net worth individuals? Or perhaps it's even the US government? Actually, there were some very, very interesting pieces by Michael McNair saying, well, there's no reason to be, or there's, from a legal point of view, the US could actually buy and sell gold anytime. So perhaps, what's going on behind the curtains with this Mar-a-Lago Accord. I think I'm not sure if gold will play the, how do you say, the leading role, but I think it will play a role in that move. And if we connect the dots, it's not only this pretty large amounts of imports into the United States, it's also the fact that, as I've said before, we're talking about a revaluation of US gold from $42 to current prices or even higher. We're talking about auditing Fort Knox, and Scott Bessent, he was trading alongside Stanley Druckenmiller, and he worked for George Soros. He said, well, actually, something big is coming, and he wants to be a part of
Yep.
that administration for
Yep.
some sort of a new Bretton Woods agreement. And he also says that gold is by far his largest private position, and that he's pretty bullish on that. So I think that makes me much more confident, compared to those, let's say, very technical things around Basel, where, from my understanding, it's not going to really have a major impact on.
Yeah.
Gold continues to gain strength as a trusted asset in a shifting global landscape. With steady central bank purchases, growing interest from emerging markets, and rising mainstream recognition, gold is increasingly seen as a reliable hedge in uncertain times. As shallow corrections and strong buying interest persist, the outlook suggests that gold's upward momentum remains firmly intact. Is gold still the most reliable asset in today's uncertain economic climate? Let us know your thoughts in the comments below. If you found this video helpful, don't forget to like, share, and subscribe. Thanks for watching.